Legally is the key word because I do not want the IRS or the CRA coming for you. People often say, so if I'm making $100,000, it means I'm gonna be paying like 80% of my income in taxes. Now, why would I want to earn more money? And the next time you hear a person say that, please share a link to this video. How's it going? Welcome back to my channel. My name is Boma. I'm an award-winning entrepreneur and community leader, and this channel is essentially dedicated to helping you succeed in life. I am talking about how to legally pay less taxes. Legally is the key word because I do not want the IRS or the CRA coming for you. So we're talking about how to legally pay less taxes. So if you're curious about that, don't forget to subscribe and like this video because it helps me on this YouTube maze. Thank you for doing that, and let's get started. If you're watching this video from somewhere else other than Canada, welcome. This advice is focused on Canada because that's where I live. I'm also wearing my glasses so you can trust what I say, and I look very smart. But I'm gonna also put a disclaimer that I am not an accountant. This is not financial or accountant advice. If you want accountant advice, please talk to an accountant or a tax professional. That ain't me. But this video is all about my personal experience in, paying less taxes and all the things I've learned over the years as a student, as an employee, as an employer, as a business owner. All of that has culminated into this time right here on YouTube, and I'm excited to share all my experience with you. Just so you know, the deadline for filing your taxes is coming up very quickly. For most people in Canada, the deadline is April 30th. And if you are a business owner, the deadline for you is June 15th. Okay? Before we talk about how to actually pay less taxes legally, we need to talk about how taxes work in the first place, because I think a lot of people don't actually understand how it works. So you need to know that taxes are marginal in nature, which means that the more you earn, the more taxes you are paying. So it doesn't mean that, everybody's out here paying like 30% of their income in taxes. It really depends on your income. If you're earning $49,000.20, you're paying about 15% in taxes, and then you're paying 20.5% on the next $49,020 up to $98,000.40, and then 26% on the next $53,939, etc, etc. People often say, so if I'm making $100,000, it means I'm gonna be paying like 80% of my income in taxes. Now, why would I want to earn more money? And the next time you hear a person say that, please share a link to this video because that is false. That is a myth that, you're losing your money in taxes if you're earning more money. That's not true. Because you're human and because we live in a capitalist society, you still want to earn more money. No questions asked. Taxes are marginal in nature, so it means that, we all start at the same level. We're all taxed the same. For $49,000.20 here in Canada, the difference is that, if a person is only earning $49,000, that's it. They get taxed 15%. But the more you earn, you're getting incrementally taxed a bit more. Hope that makes sense, but just to be safe, let's do an example. So I love Wealthsimple. It used to be called Simple Tax, now Wealthsimple. And so if you choose your province, let's say British Columbia, because that's where I live. So let's say you're a baller and you make $90,000 and you had a self-employment income of $1,000, and you're also contributing $3,000 to your RRSP. Although a person making $90,000 hopefully is contributing more than $3,000 to the RRSP. And we'll ignore capital gains, dividends, and other income. What we have here from Wealthsimple is that your after-tax income is about $69,552, and your total tax you're paying is $21,448, and your marginal tax rate is 31%, and the average tax that you're paying on all the brackets of your income is about 23.57%. Just to go back to the tax brackets in Canada, as you can see, you're not paying 33%. I'm not going to talk about provincial taxes because it really depends on your province, but apply the same information that are provided in your province of residence. I will put links in the description box, so click on it. choose the province that you live in, and then see what your provincial tax rates are. If you're watching this video from outside Canada and you're wondering what a province is, we live in Canada, and in Canada we don't have states, we have provinces. And the provinces also sort of are similar to states in the sense that in the states you have, federal and state tax. In Canada we have federal and provincial tax. That is a very quick summary of that. So now let's talk about how you can actually legally not pay taxes here in Canada. I'm going to talk about two main ways you can do this, and that's through tax deductions and tax credits. So according to the CRA, you can deduct certain expenses and other adjustments from your total income to get your taxable income, and these deductions reduce the amount of income you pay tax on, so they reduce your overall income tax. Basically, the more deductions you have, the less taxable income you have earned. So assuming your income in the last year was $75,000, but you have legal deductions of $5,000, it means that you only technically earned $70,000. So you're only taxed on $70,000, leading you to more savings. And there's so many legal ways that you can, save money and pay less in taxes. It could be because you work from home. It could be because you travel for work. It could be because you moved over 40 kilometers from work. It could be because you have child support payments, alimony payments. It could be because you have childcare expenses. It could be because you have union dues. The list goes on, and I will put links in the description box to take a look at all the deductions that you could potentially qualify for. And again, it's key to understand that tax deductions are essentially a way to reduce the amount of income that is taxable by the government. And a key one as well is having your own business, because you can claim, the operating expenses of your business as, tax deductions, which is pretty cool. One of my favorite tax deductions, which I have started to kind of obsess over, is registered retirement savings plans, an RRSP, equivalent to a 401k in the States. And that's essentially a way to offset your taxable income by contributing to your retirement. And how it works is that, especially if you are in a high income threshold, so it works best for people who are earning a lot of money here in Canada. You're able to offset how much you're paying in tax by contributing to your retirement savings plan. The difference is that this money will be taxed when you withdraw it at a later date. So think of the RSP as like a savings account that you do not touch, because if you withdraw money from your RSP, let's say, you're broke 1 month and you're like, crap, I have no money, but I've got money in my RSP. Let me withdraw, $500 real quick. You will be taxed. So don't touch that money. Essentially, the RSP is there for your retirement. So when you're, retired, you will withdraw that money. And at that point, you will be paying taxes. For instance, let's assume, I'm 29 right now. My marginal tax rate is 31%. I want to reduce some of that, so I contribute. And then I retire at, 60 years old. And at the time, because I'm not earning any money, my tax rate could be 15%. So it means that I'm going to be paying less taxes on that RRSP than I will be paying right now. So it is essentially contributing towards your future. The good thing about RRSPs is that you have 60 days after the calendar year, because as you know, taxes work in a calendar year, so January 1st to December 31st. But the RRSP is different. You have until March 1st typically to contribute to your RRSP and have it still offset your income in the past year. So for instance, let's assume the year went by and I get all my tax slips and I realize that I'm going to be owing money to the government, and it's February 15th. Typically, there's nothing you can do about that. You owe money, but with an RSP, it's pretty special because you have until March 1st. So in that case, I can contribute to my RSP and it will still offset the income that I made the year before. That's one of my favorite parts with RSP, because we know lots of people, including myself, like to do things, last minute. And sometimes you remember and it's too late and the tax year goes by. But with the RSP, the government recognizes that and they give you, some grace period to make your contributions for the year before. And let's talk about tax credits. Tax credits are not necessarily based on income. They're also universal and they apply to everyone. While, things like tax deductions sometimes apply to people who have businesses, who have retirement plans and things like that. Tax credits, they're cool. Anybody can have a tax credit depending on, what sort of mechanism that you use to help you save more money in the long run from your taxes. Depending on the province you live in, this could be different, but the federal government basically allows Canadians to claim 15% of their non-refundable tax credit. But you need to understand that you do not get a refund for your tax credits. Examples of tax credits that you could get here in Canada include tuition, if you're a student or even if you're not a student and you took, a class to improve your skills, you can claim that in your tax credits. Also, if you paid for, books and things like that, that applies to you. If you have student loans, you can claim the interest payments as a tax credit as well. Also, charitable donations will apply as a tax credit as well. But one of the myths that I often hear is that with the tax credit, it essentially means you will not pay any taxes, and that is not true. Let's assume that you have $2,500 in tax credits because you donated to charity and you also bought a bunch of books for school. And when you put that in the tax calculator, it tells you that you essentially have your tax payable at $0. It means you owe no money, but you're not getting a refund. Although only 15% of that was applied, and maybe there is a balance of, $150, $120, whatever it is, you did not get the $120 back. That is gone. So it's important to note that. While with the deduction, every dollar amount of a tax deduction, whether it's your RRSP, whether it is your business expense, whether it's your alimony payments, whatever it is, every dollar will offset your, taxable income. But with a tax credit, it is non-refundable. So whatever applies, and any remainder of that is not yours. You're not getting a refund as a result. For tax purposes, it's really important to, understand the distinction between credit and deduction. Okay, so also know that you can only donate 75% of your income. You cannot earn $50,000 and claim that you donated $50,000 to charity. No, that's not gonna work. So keep that in mind. Now that you know all these legal ways to save money on taxes, let's talk about how to actually file your taxes and not get ripped off. Over the years, I've used quite a few tax filing systems to help me with my taxes, everything from TurboTax to H&R Block and all that. But my favorite tax prep software is essentially Wealthsimple. It used to be Simple Tax back in the day, and it was now bought by Wealthsimple. I find it very, very convenient. It's easy to use. And most importantly, if you have multiple tax forms, let's say you have a T4, let's say you have your tuition credits and all that, you're able to connect it directly to the CRA. So it loads all the forms for you, because if you have done your taxes, you know that it's very annoying to have to put in one number after the other. So Wealthsimple does that for you. I know there's other tax softwares out there. However, Wealthsimple is my favorite because it just makes my life so much easier. And best of all, you don't have to pay if you don't want to. If you don't feel comfortable doing your taxes on your own using an online website, you're also welcome to go to, places like H&R Block, although I would not advise you to go to H&R Block if you have more complicated taxes. If you're a student, if you're a low income earner, if you don't have lots of tax forms, H&R Block is probably fine. I used H&R Block for the first 2 years that I was a student until I found Simple Tax, and then I started to do it myself. So of course H&R Block is an option, but when your taxes gets more complicated, H&R Block are not accountants, so they're probably not your best bet. Once your taxes start getting more complicated, just know that even getting your taxes done by a professional accountant will be about, $500, $1,000 or something like that, which in the grand scheme of things, a good accountant will save you a lot more money than that. So that's myth number 3. Don't be cheap. People think that because you're paying for an accountant, you're wasting money. It's not a waste of money to spend it on a tax professional who will save you more money in the long run, and who will also ensure that you are filing your taxes legally, because you do not want the CRA or the IRS coming after you. It's not going to be pretty. That is it for how to not pay taxes legally in Canada. If you've got questions, let me know down below. Don't forget to like this video and subscribe to my channel. I really appreciate it. Thank you so much for watching, and I'll talk to you soon. Bye.